You see, the world is moving fast. There's so much going on that I thought the journeyman would help you navigate these times, show you the opportunities, and show how the world is changing around us. So I think it's going to be a fascinating journey with central bank printing of money and what that did. The other was the rise of cryptocurrencies, and the other was the rise of technology. We have so much happening in the world of AI that right now, as I'm filming this, ChatGPT-4 has now integrated images. It's multimodal, so voice, image, and the AI itself. So it's becoming a core part of our fabric, and it won't be long before on these bloody phones, and the actual model is stored on your phone. That's where this is going. So it becomes your personalized AI. And at Real Vision, we're actually building a lot of AI tools to help people in their learning journey, because there is too much information to absorb and we don't have enough time. So AI at Real Vision is a really important thing, but AI for everybody is going to be vital at this stage. So try and keep on top of that. Try and keep on top of what's happening in places like Tesla with the self-driving car technology, which is actually AI using video. So they're training the cars using video and not some sort of person saying, hey, stop at a stop sign. That's a fascinating thing. And that's what's going to drive the Optimus robot as well. So I think it's going to have a quickening, a further acceleration of this exponentiality. And we're also starting to see stuff around genetic sciences. So I'm struggling to keep up. I'm on the Real Vision platform. I'm taking notes. We've got that incredible new note feature where I can go to the videos, clip stuff out, get the AI to answer questions, and stick it all in my notes on the Real Vision platform so I can keep a track of all of this stuff, because without it, we're all going to get lost. So note-taking is definitely a superpower, so make sure you do that. And just go down the rabbit hole with us as we try and figure out exactly what's going on.
Former Goldman Sachs executive Raoul sees a seismic shift in finance due to BlackRock's interest in a Bitcoin ETF. This move signals blockchain's importance to the financial industry. Powell predicts a $1 quadrillion migration of derivatives and equities to blockchain, potentially revolutionizing finance. BlackRock's involvement could ignite this transformation, creating opportunities for investors and reshaping the financial landscape. Presidential candidate Robert F. Kennedy Jr. vows to pardon Julian Assange and Edward Snowden if elected, demonstrating a pro-crypto stance. Kennedy Jr. opposes central bank digital currencies, emphasizing the need for a government-independent currency. He suggests backing treasury bills with hard assets, including Bitcoin, to enhance stability. Kennedy Jr. is concerned about government attacks on Bitcoin and aims to protect it for the benefit of individual freedoms. Bitcoin's price remains uncertain, with potential for a bullish reversal. Technical analysis, particularly the Relative Strength Index, RSI, suggests possible price movements. Traders can consider selling when RSI exceeds 74.21 and buying when it dips below 30.35, according to analyst Ali. Long-term, Bitcoin's outlook is slightly bullish, aiming to surpass the pretty $1,000. Despite challenges like the FTX founder's trial and Ripple's legal battles, Bitcoin's dominance in the crypto market remains strong. It recently gained against the US dollar, although it faces resistance near the 200-day moving average. Ethereum struggles with losses while Ripple's success in legal disputes was short-lived. Solana leads among altcoins, while Binance's BNB and Dogecoin lag behind. Bitcoin miners like Marathon Digital achieved significant production increases, demonstrating the industry's resilience. Let's continue our enlightening discussion with Raoul.
Crypto, and Bitcoin in particular, and macro were the same thing. They just didn't know it yet. And most participants didn't know it and didn't understand it. Crypto came from a different community. It came from a community of developers, the kind of cypherpunks. It came from Austrian economic school kind of philosophy. It came from libertarian philosophy. It came from a number of different things, but it started to attract the attention of finance people, particularly the macro guys like myself. You know, our job is to find assets that best represent our views and where we are in the world. And we are all, without question, troubled by the debt supercycle and how this all plays out. So when we saw Bitcoin, you know, one by one, people moved across. Famously, Dan Morehead was first. And then a lot of people, whether it was John Burbank, Mark Yusko, whether it was Dan Tapiero, whether it was myself, Mike Novogratz, I mean, bit by bit, everybody from the macro world, Stan Druckenmiller, Paul Tudor Jones, Alan Howard, you name it, they're all moving across because they've seen the magnitude of the opportunity, because we all knew that they weren't parallel paths, they were convergent paths. And they all converged last March. So that's when I got really excited when Bitcoin collapsed in the big liquidation. It had been building this beautiful chart pattern, that beautiful, massive, gigantic wedge I called the best chart pattern in the world, and a break of 10,000 was going to be the confirmation. And I loaded up with every single penny that I had available. And so I put it all in to Bitcoin, and it broke out. Because what was going on was we were now going into the biggest recession maybe in all recorded history. So as you remember, my thesis was liquidation phase, which was into March, and I closed out all my shorts. Then it was going to be the hope phase, and then it was going to be the kind of insolvency phase. So the hope phase happened, and that was built on vaccines and things are going to be okay and herd immunity and all the narratives that happened. But something different happened as well. Interesting enough, the real-time economies never really picked up for a while. They did exactly kind of as expected, but the markets did. Markets did the opposite. You know, I said we'd probably finish the year a kind of -3 to -5% year-on-year GDP growth, and that's exactly where we got to. So the hope was misplaced because the economy was shit, and people had been laid off, and there's structural unemployment, and many of the people in retail, for example, are never going back to jobs again. So there was a real structural problem. The insolvency phase should have been that the triple B entities, the giant corporates, should have run out of cash because they didn't have enough cash flow to paper over the debt payments that it needs to make. So it becomes harder and harder, the equity price falls and it all becomes more difficult. But that was also going to happen at household level, where households were, yes, some people were furloughed, some people were given payments, but eventually the payments stopped. And if they didn't have jobs, the musical chairs stopped and you're kind of screwed. And the same with small businesses. So we saw immediately the government do something it's never done before, which was instant transfer payments, which was a stunning move towards a more MMT style environment where fiscal policy and monetary policy are roughly the same thing, or they work hand in hand, which is what we've seen in Japan over the years. That was amazing. It helped a lot of people and basically delayed the insolvency phase. Technically, many firms, many people, many businesses are insolvent, but they're kind of being kept alive by the central banks and the governments. And still to this day, we're still in that same cycle. It's become apparent, and I talked about it in the past, is governments and central banks have to do absolutely everything to avoid the insolvency phase.
That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.